You spend years saving and drop a $80,000 on apartment unit, lock into a 30-year mortgage. 2 years later, you hate where you live. You're stuck with strata fees. The value hasn't moved. Meanwhile, someone else rents that same apartment and uses their $80,000 to buy a house in Brownsville that's now worth $100,000 more. That's the power of a smarter move. And that's why rentvesting in 2025 is exploding. This isn't about rent versus buy. It's about freedom versus friction. It's about building wealth, not just locking yourself into a postcode. And I'm going to show you exactly why more buyers are choosing to rent where they live and invest where they grow. Let's be real. The dream of owning your own home still runs deep in Australia. But in 2025, you're up against record high prices, tight borrowing limits, and brutal competition. So here's the trade-off people face. Should I just buy something to get on the ladder? Or should I stay renting and risk falling behind? There's a smarter third option, rentvesting. Rentvesting means you rent the lifestyle you want, near friends, cafes, work, while using your savings to invest somewhere your money works harder. It's not a loophole, it's a strategy, and it's working fast. Last year, over 10,000 first home buyers in Australia rent-vested. Why? Because owning the right property beats owning any property. Let's break down the numbers. So you're eyeing an $800,000 apartment in Sydney. With a 10% deposit, that's $80,000 upfront. Add $30,000 for stamp duty, legals, and moving, you're in for $115,000. That's 6% interest only. That's about $850 a week in mortgage cost. The same apartment, you could rent it for $750 a week. That's a saving of $5,000 per year. And you keep your $80,000. Instead of parking your cash in a flatlining inner city apartment, you could use it to invest in a growth suburb under $800,000 with rental demand, low vacancy, and actual upside. Your lifestyle doesn't suffer, but your net worth starts rising. And here's the bit that no one talks about. Rentvesting is equal to freedom. Want to move interstate for a job, travel, try a new city? Definitely you can. But if you bought a place you now regret, you're stuck. And if you need to sell fast, it might be the worst possible time. They say interest is dead money. Well, if your rent is lower than your mortgage and your savings are building wealth somewhere else, then renting isn't losing. It's leverage. Don't confuse ownership with wealth. Owning the wrong property doesn't help you grow. Buying smart assets does. So who's this strategy for? First home buyers with savings but with limited borrowing power. Young professionals who value flexibility. Long-term investors looking for capital growth. Anyone who'd rather grow their network than own their postcode. It's not for everyone, but for the right person, it can completely change the game. Here's what you can do. Run a rent versus own cost comparison. Use SuburbsFinder to shortlist high-growth suburbs under 800,000. Talk to an investment-savvy mortgage broker, not just your regular lender. Build a strategy, not just a transaction. And if this strategy clicked for you, hit that subscribe button because this is the stuff we unpack every week. And in the next video, I'm going to reveal how to spot locations that are about to become hotspots using different supply and demand metrics. Tap here to watch that now. Until next time,